Hey, what's going on, you guys? Welcome back to another TradingView tutorial, and on today's video I'm gonna go ahead and help you guys understand how to use micro supply and micro demand. And these are gonna be levels that you're gonna want to use when trading 0DTE expiration contracts or shorter term contracts like maybe a 2-day expiration. So the last video covered macro supply, macro demand, typically what you would like to use to enter longer dated expiration contracts. Something like an intraday, which would be a 5-day expiration, or something like a swing trade, which could look like either a 2-week expiration or maybe a month expiration, helping you time much more safer and longer term entries on calls and puts. But for this video, it's going to be tailored more specifically to 0DTE expiration contracts, or maybe your 2-day expiration contracts that we typically have with the Magnificent Seven. Companies like Microsoft, Tesla, Amazon, Google, Meta allow you to trade 2-day expiration or 1-day expiration contracts on Mondays, Wednesdays, and Fridays. And they provide a huge financial return, and if you time correctly, can make you a great result. But I want to give you guys a fair warning. 0DTE expiration contracts are some of the highest risk in all of option trading. And if you're an individual that typically is not used to taking financial losses in such a short amount of time, or if you're playing with capital that if you lose will, I guess you can say, impact your perspective on trading or discourage you from continuing from trading, I recommend that you stay away from this and you just stick to macro levels, intradays, and swings. Despite them costing a little bit more, the chances and probability of profits are much higher than something like a 0DTE expiration. These contracts being the highest form of risk in option trading, contract can move either positive 70% in minutes or negative 80% in minutes. And if you're not emotionally, mentally prepared for exiting a position in a short amount of time, or if you haven't developed that quick reaction time to cutting a loser or taking profits, this is going to be a horrible journey for you, and it's going to impact your trading career significantly. So if you're going to be playing with these contracts, I highly recommend you being 100% okay with losing the capital, but I will give you that reminder: if you make profits, don't be greedy. Sometimes I've seen clients make 50%, 60, 70% in minutes, and they don't take the profits on that position, and in the next 5 minutes, now they're negative 70, 80%. So 0DTE expiration contracts do require fast reaction timing and extreme emotional control. You gotta know how to cut your losers and be wrong, and you gotta know how to take your winners and be right. It's a skill set that honestly I myself have not mastered. It's one of the most difficult, highest reward contracts that are out there, but the risk is absolutely, it's something no one can prepare you for. So I'm not going to say that this is an approach that I would want all of you guys to do, but I know that some of you guys are kind of entering option trading with a minimal amount of capital, trying not to lose hundreds or get started with hundreds or thousands of dollars. You just want to play around with maybe $100 and make some returns, maybe scale your portfolio at a much more conservative pace than just entering with a swing or intraday that's valued at $300-400. It's possible to make an enormous amount of returns, but using 0DTE is just understand the risk, and when you see profits, you have to be quick. Don't be greedy, but hopefully this video helps you understand how to navigate independent trading sessions using micro supply and micro demand. In this video, I'm gonna go ahead and break down the concepts that you need to understand to be able to trade profitably in these 0DTE expirations, or at least stack the odds in your favor and help you avoid losses. But remember, this is the hardest part of trading. The reward is enormous, but the risk is just as high. So prepare yourself mentally for this battle. Don't think because you can't trade 0DTEs profitably that you can't be profitable on a longer dated expiration contract like an intraday or a swing. If you are not used to losing, I say you just save your money and go with intradays or swings, because they have a higher return or chance and probability of profits than something like a 0DTE. So I'm giving you guys that fair warning here, because despite even my help or even me with my experience, I still have faced significant losses in trading 0DTE expiration contracts, just because sometimes I mistime it, sometimes I can't let my losers go, and sometimes I don't take profits when I'm up significantly because of how quickly I made it. I think that there's more to go. And that's how 0-day expiration contracts mess with you. Sometimes it could be flipped. You could be negative 60% in a few minutes as you enter the position. A few minutes later, now you would have been positive 70%. So it really does challenge you mentally when trading 0-day expiration contracts. And if you're not ready to endure that, or if you feel like, hey, if I lose this capital, I'm never gonna wanna trade again, I'm giving you guys a fair warning right now. 0-day expiration contracts might not be where you wanna get started. So before we jump into this video, I do want to add that disclaimer, but now that we're ready to get started, I'm going to go ahead and show you guys how it is I break down a trading day. We'll go through some examples of how we navigate the live trading day once we have our key levels set, and how it is you guys could hopefully get started in breaking down trading sessions to maybe trade that independent trading session of a day trade. So this is going to be taking place from 6:30 a.m., 1 p.m. Pacific Standard Time, which is a full trading day for us here in the Pacific Standard Time Zone, and hopefully you guys leave here with a thing or two that helps you. So how I like to break down my days, typically since we don't have the data of that day yet, you're gonna have to reference the previous trading sessions for somewhat of reference levels. They're never accurate, they're not as accurate as a macro supply or a macro demand, but they help you kind of gain a little bit of insight to where buyers could potentially be at in the shorter term sense. So in front of me, I have the Tesla chart here, and I'm gonna go ahead and break this down to how it is I'm gonna prepare myself for trading Friday. So this data here for Friday, I'm gonna go ahead and delete it because I wanna act as if we're ready to trade the next trading session. So if you're gonna be trading 0-day expiration contracts, the one thing that I tell you guys all the time, and I want you guys to implement if you're gonna be trying to stack the odds in your favor, is preparation. You have to use the data from the trading week that you're trading or prior data sets that are relevant to the current share price to make some reference lines that, hey, maybe around this level I can expect sellers, or maybe around this level I can expect buyers. I'm gonna demonstrate it here in front of you guys, but you can never start trading a 0-day expiration contract or a market trading session with no preparation. You need some key levels using the prior days before to help you. And sometimes it can be tricky because, for example, even here with Tesla, the previous trading session opened up much lower. Well, and it could be a little bit tricky in this example that I'm going to show you guys. The trading session on Thursday, if we're going to be trading Friday, was trading a lot lower than where we opened up on Friday. So I had to use levels from Tuesday and Wednesday to help me guide myself for Friday. And I'm going to demonstrate how I did that here in this video. So I hope you guys enjoy it. Let's go ahead and jump into it. So in front of me, I have Tesla's chart. We're going to be trading Friday session. I deleted the vast majority of that data. Let's go ahead and start it off from scratch. I'm going to put it down to the pre-market. So now we have basically like the first candles at 6:15 a.m. But first things first, when trading short-term 0 DTE expirations, you're going to want to focus on primarily shorter term data. So you want to ignore a lot of the past if it's not relevant to where you're currently trading at. Let me explain that a little bit further. You notice how majority of this data is far below where we're currently trading at? You're going to want to ignore that because now these are technically what we know as outliers. You're going to want to focus on the data that's most relevant. So with that being said, now I'm noticing, okay, Monday's data, Tuesday's data, Wednesday's data is kind of familiar. I can use this. So remember, just like you would have traded at macro levels, you want to implement them when kind of trading micro levels or independent 0 DTE expirations as well, because they help provide insight to where a level of buyers can be at and where a level of sellers could be at. So let me go ahead and draw this out for you guys here. Notice we have this outlier here at 317. I'm gonna go ahead and step it up to around 320, and now I'm gonna use this as my macro supply. And yes, we're talking about micro levels, but you still want to have a macro supply drawn out for you so you know when to expect the buyers. And as we notice, we have an outlier here at 329, but there's a little bit of a more consistent level around 327 that I want to use as my macro demand, where, once again, to add more context, you can expect 80% sellers and 20% buyers. Now that you have these levels set up in front of you, your macro levels, they're going to help gauge when it is you should be, hey, if I'm in calls at a macro supply, as we approach that macro demand, in this case, I should be a little bit more wary about taking my profits and not being too greedy because we're approaching a zone of sellers. So it just helps guide you. Remember, all of this is about preparation and bettering your understanding of how the trading session or buyers and sellers can react around certain share prices. And same thing with supply. If I'm near supply at a macro level, I can expect more buyers for that trading session. Now, typically, before we jump into this, I made these macro levels here on the 15-minute chart to trade the independent trading session. If I'm gonna go 0 DTE or maybe 2 days, something short-term expiration contracts, now I'm gonna go over to the 1 minute. So now when I'm on the 1 minute, things are gonna be a little bit more sharper. I can see different key levels. And once I enlarge everything, you'll notice, okay, around this level looks like something more consistent I can kind of rely myself off of. If I enlarge this, it looks like around this level here, I want to say that's like a 323 level. If I go a little bit higher at 323, a little bit tricky here. But I would argue around this 323, there's a key level of support. And this is kind of hard because I would argue right here at 322, it looks like it's a little bit more consistent. And I think I'm going to draw my line either here at 322 just to kind of be more conservative and expect buyers around this level. And let me explain why I did this. So if I can immediately, I want you guys to pay attention to how I'm using Wednesday's data and Tuesday's data. Why? Because Thursday's data is immediately an outlier because of pre-market levels. I haven't not even taken into consideration Friday's data. We're just looking at the pre-market. The pre-market's already opening far higher than the previous trading session. So if pre-market's opening up higher, hey, I want to be aware of what the data at this level that we're opening up at can potentially look like. So I'm going to set my support line right around this level at 322. And I'm going to explain shortly why I did this. 60% buy, 40% sell. And then my resistance, you can notice there's some strong resistance around this 325 level right around here. Alright, now that you have your kind of macro level set out, when navigating the independent trading session, it's going to help you. Why? Because now at supply at a macro level, I know to expect buyers. At support, hey, it's not as reliable as a supply, but still I can expect some buyers around this level. And as I approach the selling area of resistance and demand, I can expect sellers. So when trading 0-day expiration contracts, you always want to have references because you're going to need them. You don't know what that day is going to look like, so you want to use the past to help stack the odds in your favor and help visualize or reference what previously happened around these share prices. And remember, adapt to data sets that are relevant. Thursday's data set cannot help me on Friday because Friday is already opening up higher than those highs of Thursday. So what am I going to do here? I'm going to use the next data set that was relevant, which would now be our Tuesday and Wednesday data set. So why I put my support here is because if you look at it through the broader sense, I know it might be a little confusing and hard at first, but once you train your eye to see it, you'll notice that around this level, 322, you got some jumps. 322, you got to jump. 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 There's jumps in share price around that level, meaning that, hey, it's not as consistent as supply down at 320, but it can help me. It's just a reference that I can use in my favor. Once again, resistance. I noticed even slightly on Monday, not too accurately, but Tuesdays and Wednesday, hey, this 325 level rejected, 225 rejected, 325, a little bit later in the day on one Tuesday rejected, but it's my resistance, not my demand. My demand at 327 rejected, 327 rejected, 327 rejected is a lot more consistent and reliable. But why I use resistance and demand is just to add reference to help me gain more clarity to expect when it is I'm stepping into seller's territory or buyer's territory, so I know whether to step into calls or puts based on that data. So now that we're navigating Friday, these are all your macro levels. Remember, we did this on the 15-minute. The micro levels, they're gonna look a little bit different. We're gonna use a horizontal ray. So it changes the color to green. I have them set like that because it helps me. I use horizontal lines to mark micro levels, and then I use horizontal rays to mark micro levels. So let's go ahead and jump into the trading session now. Remember, I'm teaching you guys how to prepare for that trading session with no data and nothing in your favor. You're gonna have to start from scratch and start illustrating this as you go. And I'm gonna give you guys a fair warning. When trading 0DTE expiration contracts, if in this situation here, I'll explain it right now, but typically, I know everyone wakes up early at 6:30 a.m. You want to press those buttons. You want to step in the market, press some triggers. There's a reward, but there's also a risk. Why? Because you're starting off naked. You have no data sets for that trading session, so you don't know what to expect. I recommend, if you're a beginner, you avoid the market open from 6:30 to potentially maybe even 9:30, 10 a.m. Anything after 10 a.m., sellers and buyers have already established key levels that you can reference. Now you can make a little bit more accurate decisions because you know what the price action is for the day. What is that high of day looking like? What is that low of day looking like? So you can navigate it much more accurately than just trying to, hey, treat it like red or black at a roulette table at the market open. You don't want to gamble, you don't want to expose yourself to too much risk. So collecting data is going to help set the odds in your favor. And that's something that I've practiced a lot. But in this unique scenario, I'm going to explain why maybe trading at the market open would be a helpful, I guess, an okay to do so. And let's go ahead and jump into it so you guys can see what I mean. So now that I have my macro levels set up, remember, typically you would want to not step in until like 9 a.m. if you're 0-day expiration trading, but let's look at what happens here. Let me speed this up slightly. Okay, it looks like we're about to enter the market open. As we enter that market open, I want you guys to notice something. Look at that point of demand. Where did that hit? That hit our macro point of demand, right? So despite it being 6:46 a.m., a macro point of demand is where you can enter with more confidence. Is it going to be consistent? We don't know yet. But for the last trading sessions on Wednesday, some on Tuesday, we can say, yeah, that was pretty accurate. And remember, this is live trading, so the margin for error is very small. And if you're trading 0-day expiration contracts, practice risk management. It's okay to be wrong. You don't want to be impacting your ego or thinking that, hey, I can't get this wrong, I'm okay with taking the risk, I'm gonna see how it plays. Your reaction time has to be fast and know to be wrong, but step back in and reposition, then take the profits, or maybe take your profits and just step out. Let me go ahead and explain now. Entering at demand at a macro level would give me that confidence. Okay, we're at a macro point of demand, let's enter. But pay attention here. If we go above it to maybe 327.50, 328 at most is my stop loss. If we go above this level of demand, I'm going to be okay with being wrong. Whatever capital I lost, whether this would have been an $80 contract and I lost maybe $20, $30, that's okay. You just step out. It might hurt to lose $30 in 5 minutes. I know, that's why I told you guys 0DTE expiration contracts are not for those faint of heart, those individuals that don't know how to lose capital. It's very aggressive, but hey, you have to be adapting to it. If not, you will lose more than just that $30. So let's go ahead and see how entering at this point of demand would have played out. Remember, I entered here because it's a macro point, not because it's a micro. We haven't even set any micro levels just yet because we're collecting the data. Okay, I had a micro point of demand. Look how we hit my stop loss right there. I would have then stepped out. Okay, you got it wrong. It happens. And that's why I tell you guys, 0DTEs have consequences. But look, me taking the stop loss now, if we were to pause that trading session and mark out that high now, raising our demand to this level of 328, I can know now that at 328, hey, there's a potential for a rejection or maybe a sell point there at 328. Okay, let's keep that in mind. If I go back now, at this 328 level, I know that previously we sold. I can now reposition after taking the stop loss. I reposition, And now we attack. See those puts play out now? Boom, okay. Demand to resistance. I made back what I lost, but look, taking the stop loss kept me from losing more in case that went higher. I stepped out, repositioned at a higher point of demand, which is a lot more accurate, which prior I had my demand line here because of these levels, but remember I excluded this because it was an outlier. But now that I know that that's a potential point where we can reach, I'm gonna adjust to that 329 level. It was initially 329, not that much higher level, 329.50, but this trading session topped out at 329. So I'm gonna go ahead and mark that out. And now that I entered at demand, I'm not gonna get greedy and go lower than support. So I'm gonna take my profits right there. And now you see, taking the stop loss, hypothetically, let's say that was an $80 contract, I lost 30 bucks, boom, I go ahead and buy back in. Now on that rejection off of the bigger time frame of demand, hey, now I know that's the high of day, and I can reposition, take the trade, and make my money back and some more. So we'll see what we conclude at the end of the day in profits and losses, so you guys can go ahead and identify this. Let me go ahead and fix this typo right here. Perfect. So remember, it's still 7 a.m. So I really don't want to be pressing buttons here. Zero DTEs have a lot of risk. You don't have to be trading consistently, pressing a lot of entries and exits. Collect data. Let's see where things are looking at. And now we're going to start drawing some micro levels. So, okay. All right. Everything's just collecting data right now until roughly 9 a.m. And that's how you navigate zero DTE expirations. You don't want to put yourself on any risk. Be conservative. Let the chart play out until maybe 9, 10 a.m. where you start getting these days. Because now look, even the macro levels got beat and we're establishing new highs that we haven't seen in the trading week at all. So now, okay, take a look at this. I'm gonna keep my demand here, but now the micro levels, the trading sessions, they're micro because they're independent trading sessions. So at the micro level, I'm gonna say conservatively, this 332 I can look at as my micro demand. Perfect. And now down here, I can say, hey, this initial what was considered my support, right above it, I can maybe use this as my micro supply. And my micro support and resistance still have not come into play. Now we're approaching that 9:45 a.m. and I've gotten to see its hand. I know what kind of to expect. We're now at 10 a.m. Okay, now I've collected data. I can start pressing some buttons here. And what's important here while navigating the trading day is that you collect data. So one thing you can notice here is this platform building up. And look, consistently in the past, around that same level of 326.50, there's been maybe an area of support that you can use as a reference now. So this would now become my micro support. And this is very, challenging for a beginner. And yes, they're cheap, but they have high reward. Just understand the complexity and how uncertain these contracts are. Patience is going to be your best friend when trading zero DTEs, and I'm giving you that fair warning now. Okay, notice I still haven't pressed any buttons. I'm just analyzing the chart now. Okay, we're at a macro point of support. Still around this macro point of demand that we had earlier, so understand we're still in seller's territory. And what would also help you is when you enlarge these charts, you can now see a little bit of a ceiling on them. Okay, we're at a macro point of demand again. Let's see, can we break above it? Okay, right there I'm noticing something. One, I'm noticing this bullish trend forming, but what I'm also paying attention to is this rejection now at 328, 329, slightly above 329. We're having some selling pressure, so let's say around this 329, probably like this 329.50 level, that's where I'm gonna want to set my micro resistance. Perfect. Now I know, okay, that's an area where sellers are stepping in. But we still have that bull trend, that bullish trend forming. Okay, perfect. Well, now look what's happening. We're approaching this micro support. So as we approach this micro support, notice if I even bring it up a little higher, that's a little bit more consistent. I missed that ideal entry there, but let's say if we can maybe retouch that bottom there. Looks like we didn't get it. Ideally, I would have entered right there at that micro resistance and took that trade right before the end. But as you guys can tell, trading 0DT expiration comes with a lot of risk. I only took one trade in that whole session, and it was only because I was at a macro point of demand, and I did take a loss, and then I had to reposition for a profit. But now that you have your key levels set up, it's difficult. You notice that even the trading sessions before, they couldn't really help us in the 0-day expiration of the Friday session. So it's a little bit difficult, and it's very high risk. But typically, when you're going about, entering and exiting positions, it's something that you want to know how to use these key levels and tracking them to exit and enter positions during the trading day. And this is a huge, different ball game. It's a lot higher risk. If you're a beginner, it's extremely challenging. You also have to be considerate of which strike prices you're using. So to kind of address that before we wrap this video up, I want you guys to understand, if you're trading around, let's say right now, a 327, you're typically for your strike price, you're gonna want to be at maybe like a 331 or a low, probably like 326. Remain close to the money to avoid that risk. If you go too far out, any little move in share price like this is gonna hit you significantly, and you're not gonna be able to react in time, and those losses or capital gains that you may face can mess with your emotional state an immense amount. Some of us aren't prepared or trained like that, and we won't be able to react in time, and the losses will impact us. So as you guys can see, it's challenging. 0DT is the highest risk, and this is me doing it. I was only able to take one trade profitably, and sometimes that's all you need. You don't need to force your hand. You don't need to go ahead and start pressing buttons aggressively. What really kind of impacted me here was that we did this trading session in 3 times speed. So I wasn't able to really react in time, but don't feel like you have to scalp and take multiple trades in the trading day. Spot opportunities. I was cut off by the camera. I was going ahead and telling you guys, be patient when navigating 0-day expirations. It's okay if you only take one trade. If you take multiple trades trying to chase certain levels, thinking you see certain points of resistance and demand, or if you're jumping in way too early in the market, it's going to impact you. And then you run into revenge trading, you run into over trading, which are components of a trader's behavior that sometimes lead to significant capital losses. So maintain discipline, maintain patience, maintain composure. Sometimes traders sit in front of the screen all day just to time one opportunity, or some don't even trade that day because they never felt it or seen a clear opportunity that was worth taking the capital risk. So learn to manage your emotions and not just chase the money, but really see, okay, these areas of demands are being respected, these areas of supply are being respected, managing your stop losses, taking losses and repositioning for profits. That's going to be the importance of building yourself up as a trader, learning to be patient, avoiding those revenge trading, avoiding that over trading. That takes a lot of discipline. A lot of people come into this very immaturely, wanting to take multiple 6-7 trades a day, make 300, 400, they chase the money, right? That's not what you want to do as a trader. The stock market isn't going nowhere. These 0-day expiration contracts aren't going nowhere. If you make money or lose money, the stock market will not stop. It will continue with or without you. And I give you guys this fair piece of advice because not a lot of people out there are going to tell you this, especially young traders in our 20s. We're about the money. We're about the risk. We want to be in these markets every single day. And some people will maybe say, yeah, you're being too safe. You're being too conservative. Ask them for their P&L. You're going to notice the people that are more conservative, more patient, more strategic behind their entries have higher percentage of profits. So don't be immature. Be patient. Manage just collecting data. As you collect data, now myself, approaching Monday's session, I now know 332 and a quarter, or 334 more specifically, is our macro point of demand that I have to be aware of on Monday based on Friday's trading session. And at 322, almost 323, hey, that's going to be my macro point of supply that I want to be conscious of approaching Monday's trading session. You notice how Friday was just a preparation for Monday, and I was just watching, just collecting data, just looking at what was happening, and maybe I don't even take a trade on Friday. I wait until Monday using Friday's data. Now I can take more accurate trades, and that's how you build yourself up. You're just stalking, you're a hunter. When hunting, you don't always just shoot the animal the second you see it. You stalk it, you look at its tracks, you wait, and when it least expect it, boom, you fire for the kill. That's how you want to treat trading. You know, don't feel like because a trade happened right in front of you, now the next one you have to force it. No, traders miss out on opportunities all the time. But when they get that chance again, now they execute on it because they were patient, they hunted, they stalked this trade, and they found the opportunity. And that's something very important that I want you guys to implement if you're going to be trading 0-day expiration. Something like a macro level supply, macro level demand. Now you could be, hey, non-negotiable, because these levels are much more aggressive key levels that have more buyers and sellers at them. But something like a micro level, now you have to be very conservative and mindful that you're risking, losing 40-50% of that trade in sometimes minutes. So be patient, practice that discipline. Don't be jumping around, pressing buttons, being immature. Patience. And I tell you guys this because I want all of you guys to have longevity behind your careers. I don't want you guys to trade for 2-3 weeks, a month, 2 months, and then give up. There's a lot of opportunity, a lot of money to be made, but learn to pace yourself, learn to stock the markets, and more importantly, focus on just 1 or 2 assets. Something like Tesla, stick to it. Something like Microsoft, pick a company that you really like that has these 0-day or 2-day expiration contracts and longer term contracts if available, and just watch it, monitor it. When the trading day opens at 6:30, stock it. Just watch it, watch it, watch it. You're gonna become more relevant, more context, more information is gonna start being presented to you for you to make accurate decisions because you've been watching it for so long. Now you know what to expect around certain levels. Like me, I love Tesla. That's all I watch. I know that if Tesla approaches $400 a share price, sellers step in. I know now if Tesla approaches 320, 315, buyers are stepping in. 309 just happened last week and buyers stepped in very quickly. I'm tracking these levels as we approach trading days. Not every single day am I stepping into these markets and pressing buttons just because I feel like it or I want to make money. It's about being conservative and patient with your opportunities and the ones that you chase to create that profit and result. So trading does require a lot of discipline, a lot of patience. And I believe a lot of you guys are capable of that. And a lot of you guys can make the result. My buddy Steven making over $3,000 in one day. My buddy Brandon making $1,200 in one day. My buddy Noel making over $2,000 in one day. My buddy Anthony making over $4,000 in one day. All these individuals practice trading here with us at SoCal Trading Group with these same habits, these same coaching, these same skill sets, and I guess you can say pieces of advice to help them create multiple thousands a day. These happen in a day. Imagine, how much people go to work for a month to create that amount of money? But this can be a tool set that helps you make money in a much shorter amount of time, making you a more valuable individual, helping your financial situation, provide for yourself and those that you love. But it does require the right amount of discipline, the right amount of community, the right amount of teachings to help you do this profitably and avoid losing and, more importantly, giving up. So I hope you guys enjoyed this video. Thank you all for your time. I hope you guys enjoy it and you find it helpful. I only took one trade on the 0DT, and that's because, look, you have to manage risk. Don't feel like you have to overtrade. And that's a real piece of advice that many people didn't expect in this video. Maybe people thought I was just going to scalp and enter 4 or 5 trades and be bulletproof. That's not what you want to leave here with. Be patient. If it's that one trade made you money, it's better than taking 8 and ending the day red. That's what it's all about. So I hope you guys practice responsible risk management habits in your trading career, and this video is helpful, helping you guys navigate 0-day expiration contracts. Thank you all for watching. Jerry Trades with SoCal Trading Group, over and out.